Now Advanced is connected.
This pencil is connected. ஏன் இது காட்டுது இல்லைன்னு தான் நான் யோசிக்கிறேன்.
Grab this thing. The what about the iPad?
வருது இல்லையே ப்ரோ.
Are you guys okay?
Yeah. You continue the session, comment for days.
Sir?
You continue the session, comment for days.
Sure, sure. Let's move on to the platform as well. Yeah. Hmm? Resources and access is pretty easy. And even the PER part is easy, much easier compared to CA. You don't have to submit these quarterly sheets and all. So CA, you have to do that entire whole thing for CA. Okay. The ACCA one is pretty straightforward compared to the way that you need to fill for CA. Thing is, ACCA is catering the global market now. So some stuff, even though they want to do, those are not practical. For an example, now this quarterly summary submission, let's say ACCA wants to do that, still they won't be able to cater it because we are talking about the overall global market. So in that case, it will not be practical. On the other hand, we are talking about Sri Lankans and South Asians for CA. Yeah, administration the thing is now, example, if we take a class, so when I'm doing a class in India or some other European country, so at least during the time that they're in the class, they're focused and they read. So if I give homework, that happens. So it'll be a homework. But here, if I give the flexibility, no one does the work. So I have to track everything. Like now, if you take me, I don't know about the others. If you take me, anyone who comes to my classes, I have separate tracking. So the name, if I have conducted any mocks, the marks of the mocks, skill stages, skills is harder compared to professional, according to me. So for skills, I usually keep weekly quizzes on the live classes. So everyone has to submit me the answers, and I will be marking the answers one by one and giving the comment. So all the quizzes, how many marks each student has taken, then the exam application, whether they have applied the exam or not, and whether they have sat for the exam or not. And after the exam, I usually used to at least check on WhatsApp what is the status for their exam. Then once I get the marks, I incorporate that also into the list. Then I compare with the mock marks and the quiz marks that I got from the students and compare with the actual marks.
Classes and they just giving them and they just do a lot of time, but they have a lot of time. That time. First level they have time. Skills I didn't get that much of quality is given.
The reason being, one reason, knowledge level, it's multiple choice questions. No, so technically, even a system can mark it. You don't need lecturer's time to mark that. But when it comes to skills and professional skills, yes, partially the system can mark the balance part lecturer has to mark. When it comes to professional, each and every paper, if I do a mock, I have to mark. I can't allocate anyone else to do the marking. No. So in that case, lecturer's time is required very heavily. Whereas when the number of students increase, it's a bit hard. But the problem is in our countries, if we don't go behind the students, they don't do the work. That's the issue. So the European fellows, even certain Indian students, they come for the class with a set of questions. They have done the homework, they have read everything, they have gone through all the videos. They come for the class to get the doubts clarified. That is one reason, but the main reason is the way we used to study. So for them, we don't spoon feed in European markets, no. So we just give the concept. Now, if you take European lectures, this whole paper will be done within 1 hour. If you take a European lecture, that's how it is. They just exactly. They will just give the points. They will just explain you the points. The rest, you have to do your own work and understand how to put it, how to draft it. That part is homework for you. Yeah, it's half an hour, 1 hour max. But in our case, we have to do the spoon feeding part. For example, if I don't allow you to write the question or the answer in the class itself, how much is the possibility you write this at home? Almost negative, right? But if it is a European fellow, it's other way around. So I'm teaching for a European guy as well. He's an online fellow. The Sri Lankan, but he's resided in UK. So for a while he has been there. So now he has adapted to that style. So it's like when I start a chapter, next day he's like, "Sir, I went through the chapter. These are the queries I have. If you can clear it out, we are good with the chapter. We can move on to the next one." So like 2 to 3 chapters, very easily we can finish off because he does his homework. But that's a cultural difference. We can't complain on that. So that's why lecturer has to be mindful enough to tackle different people with a different approach. The same approach cannot be used for every individual. In Sri Lankan context, generally we need to be behind the student. Otherwise, it will not happen. At the end of the day, we need the student to get through as well. No? Yeah. So our objective is also here that few magical words that I got through. It doesn't matter 50 or 70 or 90 or 100, that doesn't matter. Somehow you have to get through. So we also lecture for hear that words, for nothing else. So when we do that, we feel that we need to be behind you. So it depends on the students as well. So generally, in South Asian culture, we need to be backing the students. But if it is around somewhere around the line, like European countries and all, it's other way around. They are backing us. So they are on our tail. Like they read and then they send questions. I couldn't understand this one. What to be done? So that is the difference between the two cultures. So that's why even if you take papers, theoretical papers, Asians score really well in ACCA. But practical papers like APM, those fellows score like nothing. The European fellows. That is ACCA students are like South Asians and Also, you have a large market. Europe also, you have a large market.
I have seen that in particular book and I think I have seen websites. So it's not like there are a lot of like South African, Southern African people. I don't know Japanese.
Japanese
I
are
don't
not there.
think Pakistan is like that.
Not
Pakistan-
really. We have a large market in India, Pakistan, Singapore, uh, yes, African countries, and UK. So it's a bit of a combined market, and we have some good fellows in Malaysia and Philippines as well.
Yes, Philippines are mentioned.
So it's a mix. So the difference is it's not dominated by one country or one culture. So if you take the Global Council, we have a Sri Lankan there. Current president is a Pakistani lady.
Yeah.
There are UK fellows also in the council. So it's a mixture. So global wise, they are not prioritizing anyone. They are giving a fair opportunity to everyone, not equal. I don't agree with the word equal with European fellows. They don't care a damn about the equality, but they go with the concept of fairness. So they have given a fair bit of opportunity to everyone. So even the Sri Lankan one, Dr. Dinusha, she has been elected for 3 consecutive times now to the council. So the fair opportunity is given for everyone. That's why you feel like it's not dominated by Europe.
Yeah.
Council has everyone. Last president was from Nigeria. I forget his name. Joseph Olabi. He came to Sri Lanka also. So had the opportunity to meet him.
But the Prime Minister Indian.
Prime Minister India?
There was Indian Prime Minister.
In UK. UK is done now. I mean, it's politically, I would say they are in a bit of a hassle than us. Because how many prime ministers change within a very short period of time?
Short period, yeah.
We are better than them. Right now, we are better than them. Economically, no, but politically, I feel compared to UK, we are better right now. And I
No, now politics is like compared to it's kind of like okay.
have to wait and watch because what happens is that is the risk that I am seeing. Yeah, educated doesn't mean you're knowledgeable. There is a risk on that because sorry, some fellows are really good. I know that some are good, but we will have to definitely give them a time and see what will happen. The problem is in our countries we accept miracles, no instant, like Maggie noodles type. That kind of a result you can't expect. You have to give them at least 2 years and see now whatever said and done now somehow they got the power, whether you like it or not, they got the power. So now we have to wait and watch, and we have to give them a fair enough time before we judge them, good or bad. Before judging them, we have to give them a time because 70% of the people going to the parliament for the first time, they haven't even seen the parliament from the outside. 70% of the parliamentarians this time, even most of the ministers. So to get used to the parliament culture, get to know about the laws itself, it will take around 5 to 6 months or so. We have to give them a fair time and see where we will end up. Can hope for the best. I mean, everything we have to take positively. So let's see what happens.
Yeah, sometimes their intention, they even though they aggregated or something, I don't know what's their intention. Some people like self-interest.
Can be. But the thing is, public trust is there. That is a big strength. When the public is with you can do miracles. Because right now, if the government asks any professional in the country to come and help them, they will voluntarily do that. The public trust has been kept. No, so that is a big strength for them if they use it in a proper way. They utilize it properly. I think that itself is more than enough for them to survive. And internationally also there is a trust because Sri Lanka was well famous for corruption, and these fellows appears to be anti-corruption. So if that is the case, globally also they will get the support, especially the Japanese and all. So hopefully, whatever they show, if it is correct, they can do something. But whether what they show is correct or not, only they knows. But obviously, we need to give the time. Whoever it is, we have to give the time and see where we end up without expecting miracles. Nothing can be done overnight. So if you ask me, can I make you get through the exam tonight? No, I can't do that. We need time for that. You have to study, we have a plan, you have to do papers, then only you will get through the exam. So that will take time. The thing is, are we ready to give that time? That is the problem. With Sri Lankans, you can never trust that.
The point is that our point is like there's like huge instability in economically as they
That is still there. Hidden, but it's still there. But we haven't done anything economically yet.
like the biggest mistake is majority like investors get mainly focused on the like even for trading they are like they are but they are they valuable things.
I would say if Sri Lanka to come out of this current economical jargon, they have to do two things. They have to have a short-term plan and a long-term plan. Long-term plan goes with two things again. One with education. You need to change the Sri Lankan educational culture. We are creating parrots, not educated people. We are preparing people who can memorize, not the people that can think. That is not there. So we expect people to know, but from where to learn? Law, economics, tax, these should be, and political science.
Yes, yeah, the worst thing is our people to get graduate, they get around 24 to 25 years.
Yeah, by that time, the foreigners are getting MBAs and PhDs
In our case, they are like MBA qualified
easily.
easily. We are the like outdated people.
Even if we take our syllabuses are the same. So that whole education system needs to be changed. Second thing, if you are looking at long term, like you said, we need to have a proper plan. Like what are the areas we are developing, what are the areas we are not going to develop, and we have to stop purely thinking about tourism. Tourism should be only one aspect of the economy, not the entire economy. We are depending 100% on economy. We are always talking about tourism only. Tourism is good, but that's not the only thing we should depend on. So that needs to be changed. That is long term. Short term, immediately we have to pump money from tech fellows, educators, and exporters. We need to immediately boost them because we need foreign currency. Our reserves are not in a good position. So to do that, the immediate cash flows can be generated only from these three industries, no one else. So you need to support these three industries at your best. That will create you the income. If these two can be done, I think the economy can be changed. But are we ready to do that is a different question. If that can be done, yes, the whole economy can be, would say, can be converted within 1 year. If you do it properly. Because these three industries in Sri Lanka is very strong if you give them the proper backup. You should come out of that government taking over everything. It should be a private and government collaboration. So the profit motive also should be there. Otherwise, there's no motive for people, right? There should be the profit motive also. It should be a mixture. Profit motive, but giving the benefit for the entire economy as well. Not an excessive price, a reasonable price, and a decent service. That will automatically change if this whole thing happens. Exchange rate will definitely come down if this happens. It's all about how you define the even tax. You have to drastically change the Sri Lankan tax policies.
But what's the in Sri Lankan taxation?
Good question. If you take UK, what do you think is the main tax income?
In UK. Income. But in here, it's the income tax is like the gray area.
It's not gray here. Income tax is irrelevant here. Look why the pen is not working. A second, I'll check it. Why the pencil is not working. So if you take the European tax system, it's mainly about income tax and corporation tax. This covers more than 50% together. VAT is around 30% max. Generally it's below.
But that has a lot.
Has,
But the
but
rate is
rate is also not low. But what happens is VAT you have input output set off. No?
high.
So you only get the actual income for you is based on only your actual value addition only. So even though it seems like a very hectic tax, yes, administration wise, yes. Income wise, in European context, no. This is UK. In Sri Lankan context, income tax plus corporation tax maximum 30%. VAT covers 60 to 70%. This is an indirect tax. These are the direct taxes. So that shows the impact on the economy.
Yeah, that's all negative because of price tag.
The problem is when your indirect tax component is high, who's suffering? Overall economy. Consumer is suffering means consumer is the economy, right? End of the day. So the entire economy is facing the tax burden. But if you are taking here, this is only based on what you earn. If you earn only, you are paying. But here, it doesn't matter whether you earn or not. If you need to survive, you have to pay. That is why we feel a big burden from that. Whereas even their rate is high, they are not feeling a big burden. This reform should happen in the tax system. And our tax slabs, I would say, too smaller for income tax. We need to increase the tax slabs a bit. Rates, fine. I feel, I mean, if you're earning, you should pay tax. Not a problem.
And the rate is competitive,
That is it.
33.
Not just the rate. If you expand the slab, it is fine.
And 620.
We go up to 32. But the problem is we go by every year 400,000, no, 250.
There's something called in the SSC.
SSC is not a big thing. That is only on the businesses, no. The problem is on the individual tax, not the corporation. No. The corporation tax is also it's around this much now. It's around this, whereas UK itself is at
25. Yeah.
yes. But this somehow they will survive. But when individual income tax is bursted, they are losing people. They will leave the country.
You don't know how to release people.
Again,
Taxation.
this is a myth. It is not the reality. They have tax, but they have tax-free zones. Every industry is not taxed. Every place is not taxed, but there is a tax. Even Dubai now they're introducing the taxes. Income tax they're introducing now. So what happens is still they have some tax-free zones, tax-free areas. So that is the way that you have to tax, right? So if you are doing a tourism industry or export industry, I come and say, okay, still you have to pay 30%. If you are doing education, I come and say, okay, I don't care. You build up the next generation, you have to pay 30%. Similar to everyone else. No problem, right? So that is why earlier we also had different tax rates depending on the industry. But now all those things are abolished, no? So I feel this reform you need to have in any tax system. It's good that you raised. This can be an exam question actually. Because now this shows you how a generic tax system should work, isn't it? So generally, your direct tax component should be higher compared to your indirect tax component. So maybe you can get an exam question where one economy you're operating is having a higher component of what do you call the indirect taxes, whereas UK is operating at a high level of direct taxes. You might be asked to compare the two economies and give a tax planning advice. Can happen in your exam. So now you know how to answer that. Correct? So ATX, the beauty is whatever happening in the real world can be an exam question for you. Because we are talking about what will happen in reality. Even though it's a hypothetical scenario, it will be a real world scenario as well. Something that practically can happen. So this could be an exam question. So now you know how to address that. A basic idea of what are the points that you need to jot down and how to structure it. So we started with something else, but we ended up with something completely different. Technically, this can be a question. You might be the guy who's going to advise which economy to state, how to move around that, and why you should stick to the specific economy.
But I was wondering. So that's advice. And you can get the entire analysis with the ChatGPT get the advice right. Won't be accurate, but
If you go to that level, you can do anything from that. Whatever you want, ChatGPT will do for you. But the thing is, advice might not be correct. Because ChatGPT gives you a generic answer. No? Depending on the factors, it will give you a generic answer. But when it comes to the reality, it's not just about facts and figures. No? Certain stuff factually might be correct, but practically you can't do. Isn't it? Timing might be there, resource scarcity might be there, human factor can be there, human philosophy can be there. So when you are writing an answer, all those things will be catered. But when you get from ChatGPT, it will be only based on the fact and figures. All based on only facts. Other things are totally ignored. So that's the difference between the human mind and the AI. But yes, maybe someday AI will come to that level. Right now, no. Someday in future, you never know. Maybe Terminator can actually happen. You never know. But yeah, right now, that is safe. Right. So this part is okay. Right. Then let's move on to the paper that we were discussing. I think we discussed few questions from this, no?
Last question.
The last one. Let's move on to that. Okay, so we did the donation of ordinary shares. We did not do, right? That one we discussed. GA we discussed.
Yeah.
So the gift of ordinary shares in LAC Limited only we have to discuss that. Right. So the next one, again another memo. You have to write a memorandum to Rossetti's client file. Now this is not your manager. This is your working file. So you need to be slightly explaining a bit. Correct. Okay. On 1st May 2024, the market value of 1,500 shares in LAC Limited will be £27,000. Rossetti is a higher rate taxpayer and business asset disposal relief will be available in respect of the gifts. For each of the two proposed gifts, explain whether or not the gift rollover relief will be available. Next one, calculate Rossetti's CGT liability, if any, and recipient's CGT base cost in the shares received. First of all, can you recall what is business asset disposal relief?
It's like the business, like working in the business, they will redeem.
So what's the relief under VADR? What is the relief you get?
It's like the mark, lower of mark value.
VADR, what we did was, so individual one, so not individual, the non-business related ones we discussed last week, I think. So business assets, we had 4 main reliefs, but there were some other reliefs as well. I will only focus on the 4 main right now. So 4 main was BADR, we had IR, we had ROR, rollover relief, we had GR, gift rollover relief. And we had EIS, SEIS, all those stuff as well. So this is only the main for that I'm talking about. If you take BADR here, up to 1 million, we are taxing at only 10%, irrespective of your level of income. IR for qualifying businesses, up to 10 million, we are taxing at 10%. ROR, we are deferring. GR, we are deferring. This is what happening now. ROR, what happens is you replace a qualifying business asset with another qualifying business asset. Yes. On the other hand, GR means qualifying asset you give to someone else. At that point, you are not paying any. Yes, automatic transfer where you reduce the cost of the person who's receiving the gift. Okay, good? Right. So right now they are focusing on 2 out of these. First part, they are focusing on this one. Second part, they are focusing on this one. Correct? Right. Then take around, so we are giving 7 marks, take around 5 to 10 minutes. try to just write down the bullet points that we need to require, we need to have an idea about in this situation. Sure.
paying is costliest less one. Automatically it gets realized that you are paying or you are disposable. So it's the other way around. Okay. It's kind of like that. It's a points. So one is the brother is giving it's not clear. Before you get other thing, yeah. Maybe
Okay.
there's some TVs.
Hmm. Right, let's see. Let's go for the exhibit 3 as well. Right. So, as you know, I purchased 70,000 ordinary shares in Lark Limited. That is a 70% holding in June 2014 for 1.5 pounds per share. I have made gifts from this shareholding in the past. On 1st May 2024, I make two further such gifts. 1,500 shares to a discretionary trust established for the benefit of my sister's children and 1,500 shares to my brother. These will be my only gift in the tax year 2024-2025. My brother has been living in the country of Lahiru since 2015. Unfortunately, he is in poor health such that he has not visited UK since 2017 and will not be able to do so in the future. When I have made gifts in the past, I have claimed the gift holder relief. I would like to do this again in respect of the gifts that I made on 1st May 2024. I recall that when I last made the gift of shares in Lark Limited, the relief was restricted to 94% of the gain arising due to the undeveloped land owned by the company. When advising me on these gifts, please assume that this percentage has not changed. Right. So easy one is brothers one. So brothers one, I agree with the point that you said. If he is not a resident of UK and there is no plan for him to come back to UK as well. So technically in this gift follow really what happens is, I just summarize that. We take the market value, whatever. We minus the cost from that. So then you will have a gain, right? So we don't tax it now. Instead, we reduce this from the cost for the next person. So this is basically a deferral in that case, isn't it? Because in the future, when the recipient sells the asset, the cost is a lower amount. It will not be this market value. 90% of the time, it would be this cost itself. Sorry. It would be this cost itself. So technically, he is absorbing the CGT in that case. Correct?
But in this case, I can see a huge difference in that 2,000 is the cost, 24,000 is the market value.
Yeah, can be. No problem. But the problem what happens is here, now this brother is a non-resident, right? If that is the case, when this fellow sell, we are not in a position to recover the CGT, isn't it? So whole gift over relief is based on a logic where when the recipient dispose the asset, we are in a position to recover the CGT in future. It's a deferral, not an exemption. But if the brother is not in UK, it's not a deferral, it is going to be an exemption in that case, isn't it? Because now you can't recover it. Correct? Therefore, for brothers one, we are not in a position to collect or allow for the gift holdover relief.
So the base cost, the gain is the same cost, no?
Most of the times, yes.
say 2000.
Yes, correct. In this example, yes, but it can change. Let's say brother also paid something, then it might change. Okay, that's why we don't say it's sticking to the original cost. There can be a situation where brother also pays something.
If anything, it's adding.
It depends on the amount. So if the amount is more than the original cost, yes, there would be immediate gain. But if it is less than the original cost, we can simply ignore that. We're good? Right. So this is about the brother. On the other hand, the gift to the trust. But here there's a small trick. When you give to a trust, exactly, there would be an immediate IHT coming into the picture, isn't it? As a result, even though this 94% story is there, we can fully allow you on the gift holder relief because from the IHT we are claiming, isn't it? Correct?
But at the point of take that.
At the point of gifting,
Because
yes.
take that.
No, at the point of gifting itself, we are taking them. We have 20% one at the time of gifting.
Yeah, trustee base.
Yes. It depends. You can decide whether the trustee is paying or you are paying. If it is a trustee is paying 20%, if you are paying 25%. You're good? Right. So this is what we need to write. So and we need to give the calculation, the numbers. Let's see how they are going to put this into a structure. Right. So again, since they are asking for a memo format, the same format we are going to follow. Then the two gifts we are going to speak separately. So both are 1,500 shares we are talking about. Both gifts were 1,500, right? So 2,250 will be the what do you call cost at both points. Market value is also going to be 27,000 at each point. Then the chargeable gain for both shares would be for 24,750. So it's a common calculation they have shown because the same number of shares, same company, same cost. So we did one calculation. That is fine. Then we are explaining the impact for both of the two situations.
So what happens if the order
Hmm.
so the person is not resident, and if he is a resident, what will happen?
Both are resident.
Yeah, the brother is resident.
Then of course you can claim gift holdover for that as well. Then no immediate tax impact.
So when we are gifting, when Rosity is gifting, he has to pay us.
No.
There's no impact to say.
No impact for Rosity if the gift holdover relief can be claimed. So trust case we can claim. Brothers one we cannot claim. So
in this case, Rosity is paid.
brothers one, yes.
This one she's the one paid.
She has to pay. Okay. Right. So the trust one, like we discussed, IHT is immediately charged. Therefore, 94% restriction, we don't need to worry about that. Fully, you can allow for the holdover, gift holdover relief. So trustees cost, therefore, will be only 2,250, like we discussed earlier as well. Correct? On brothers one, he is not a resident, so we cannot consider that under the holdover gift holdover relief. Therefore, Rossetti will have to pay the tax. So we already calculated the chargeable gain 24,750. But from that, she can deduct her annual exemption 6,000. Deducted that. Taxable gain is 18,750. But they say it's qualifying for BADR. So if it is qualifying for BADR, you can simply multiply by 10%. That's all we need to do. Are we okay? So we did one full question which contains 50 marks now. So was it hard or easy? How do you feel about this?
like it's easy. Like I read the other two questions also.
Hmm.
And like easy, but to get the knowledge is like that. You need to be.
Yes. So that means if we read properly and if we are good in our concepts, we can actually do this. You're good? Right. Shall we move on to the next question then? Sorry? Right. So you should assume today's date is 1st June 2024. Risa has requested to advise in respect of after-tax amount of an inheritance and the reliefs available to reduce the inheritance tax liability. So there can be APR or BPR coming in this situation. The agricultural one and business cruises one, the two reliefs we had for inheritance tax. Right, we'll see. So the release available for her share of partnership trading losses. Okay, that's a normal trading loss relief we have discussed on the individual side. The tax relief available for interest payable on two loans. Let's see, maybe a qualifying interest coming into the picture. Only one exhibit, it is about Risa. So let's see what are the requirements first. First one, explain the relief available in respect of lifetime gift made by Fiera to Perla as a result of Fiera's death. Let's see that one first. We'll dig in one by one. Okay, Risa has recently inherited the residue of her aunt Fiera's estate, left her previous employment on 30th September 2023, became a partner in Perot and Co. on 1st October 2023. She has not made any disposals of capital gains tax purposes since the tax year 2020-2021. Then Fiera died on 8th February 2024, had always been tax resident and domiciled in UK, gave Riza's sister Perla an investment property on 1st March 2020. This was Fiera's only lifetime gift. Perla still owns this investment property, which was valued at £210,000 on 1st March 2020 and at £182,000 on 8th February 2024. So we know the transaction between Fiera and Perla now. Can you give a try to jot down a brief answer about what you need to write here? Great. Okay. Mhm. This was not from the tax revision part. This is coming from the new additions for ATX, the study hub based recordings that we did. So we have a provision where if your value is decreased to give you a benefit, isn't it? The decrease in value benefit. Right. There was a small thing like that. So what we are trying to do is now there can be time gap, right? And based on that, there can be a reduction in value. So in this case, that is what happening. So if you take the values, initially it was valued when the gift was made, it was valued at 210,000 pounds. But now it has been drastically reduced, 482,000 pounds. Generally, the value will be fixed at the time of the death. Sorry, at the time of the gift. But if there is a drastic reduction in the value, then from your point, from the recipient's point, it is unfair. Upon death also, if I charge on the higher value, isn't it? So therefore, we give you a benefit if there is a drastic reduction in the value. So that is the relief that she can claim here. Are we good? Right. So let's see how to draft that. A small 2 to 3 sentences would be fine. So simply what they are trying to say is it's an investment property and the value has been fallen from the date of gift to the date of death. As a result, when you are calculating, you can consider the reduced value. But yes, one condition is there. When you are assessing the nil rate band, then you have to consider the actual value. Like you have to check the remaining nil rate band. For that, you have to take the value at the time of the gift. But when you are calculating the inheritance tax liability, you can take the relief for the reduction in value. Not a proportion, simply you can go for the current value. Are we good?
So it's like 240,000 within the 7 years.
Is it 240? No, right? It's 210. The gap we can get as a relief. The gap between 210 and 182.
So it's like when we like doing a calculation.
Mhm.
So it's like anyhow.
It depends whether an nil rate band is sufficient or not.
So in this case, the interest band as of date and interest band is like 175. So
Nil rate band is 325. 175 is the residence nil rate band. What do you mean by anyhow it reduces?
210,000.
Mhm.
That is the 325.
That depends. What if she had some other gifts as well? Right now, what we have read on the first part, so we don't know whether there are any other gifts as well. That is one. Second one, that can be used for someone else if this reduction in value is covering some part of your IST liability, isn't it? Correct? Plus that 325,000 is from the point of as viewing. But this reduction in value comes into the effect from the Perla's point of view. So Perla is getting a benefit either way. The method can be nil rate band or from the reduction in value. Doesn't matter. Somehow Perla is getting the benefit now. Are we okay? Clear? From the Perla's perspective. Are we good? Right. Then let's see the second requirement. Calculate amount of Risa's inheritance from Fiera's death estate after deducting any inheritance tax payable. You should include an explanation of the relief available to reduce the taxable value of the estate. They have almost given the answer. That's why I say it's not a hard one, just that.
It's not that. It's not- But it's fine.
Let's see what are the other, what do you call, information that they are giving about the Fiera's estate. So we read up to Perla's part. So left the whole of her estate to Riza, except for a specific bequest of 90,000 pounds cash to Perla. Another 90,000 has been kept for Perla. The rest has been given to Riza. Fiera asset owned at the death. House, that is a residence, 370,000 pounds. 20,000 shares of Gatto Limited, an unquoted trading company, 240,000 pounds. Personal chattels, 160,000 pounds. That's it. Cash is given to Perla from the estate. You get it's like a specific legacy. Additional information, Fiera had inherited the shares of Gatto Limited, 20% holding from her husband Marco on his death on 21st November 2022. Let's see. Let's see about the details we have. Marco had acquired the shares on 2nd May 2014. Okay. Marco had used the whole of his nil rate ban for inheritance tax purposes. Fine. Those are the information available for requirement number 2. Can you give a try for that one as well? are you calculating the estate value? Residual estate value. So first of all, let's see how to calculate the. I mean, forget about this question. In general, how are we going to calculate this whole estate, residual estate value? How should we do that? First of all, yeah. Okay. That is the IHT residue. They're asking for the residual estate value, isn't it? So what happens is, now let's say now our concern, that lady's name is Freya, right? Fiera. So Fiera has some assets, no? So what she's doing is, part of the assets she's giving to Perla, and the balance she is going to give to Reason. Agree? But apart from these two, we are also there, isn't it? As IHT. Correct? So Riza is getting only the balance value of the estate, isn't it?
It's like including Perla's also.
Let's see. So if I nutshell it down, we call this as residue. Okay. That's a separate way to calculate the residue. First of all, up to IHT, what you said we need to do. So we get the estate value, something. Then whatever deductions we deduct it. Then we get the net value. From this, you can take out the exempt transfers, inter-spouse transfers, charities. No, there is no limit for that. Inter-spouse transfers and all are exempted ones, not the nil rate band. Two different things. Like, let's say you're married, you transfer something to your wife. That is an exempt transfer, isn't it? So those exempt transfers, we take it out. Then we get the taxable value, or rather net figure. From this, you can deduct nil rate band, resident nil rate band and nil rate band. Correct? Then you will end up with the taxable estate. On this, you calculate 40%. This is your IHT. This is first half of the residue calculation. Agree? Then we need to move to the second half of residue. That is, again, take the estate value. From that, you deduct any exempt transfers, any mortgages or debt, any specific transfers. That means you say for a specific person, transfer a specific amount. In this case, per last 90,000. It's a specific transfer, isn't it? We call it as specific transfers or specific legacies. Are we okay? Finally, the IHT. That also we need to deduct. After you deduct all these, the balance would be the residue estate, isn't it?
So it comes so far that they.
Sorry? Sorry?
The loans has to be deducted.
Legal loans, you have to deduct. Legal in the sense, if it is a contractual obligation, you have to deduct. Because from your estate, the debtors needs to collect it, right? You have to pay it to them. Yeah, whether you like it or not, that will be recovered. Because that those people will include the tax authorities as well, isn't it? So whether you like it or not, the what you call contractual obligations, they will take it out. Very good. So this is the second phase of the residue calculation. So you start at the first phase. You stopped at the first phase, correct? Right. Apart from this, coming specific for this question, you have a relief as well. You had shares, right? Gatto or something. How much is the value? 240. This Gatto is an unquoted company. Correct? And Piera and her husband collectively owned for more than 2 years, isn't it? The ownership? Collectively more than 2 years. If so, can you recall, if these two criteria are met, we have a relief. BPR 100% relief.
Yeah.
Unquoted company and the individual whose debt should have held it for more than 2 years. But if the spouse has held it for a while, if it directly got from the spouse, then the ownership period of spouse also can be added. So in this case, yes, Fiera did not own for 2 years, but collectively Fiera and her husband own more than 2 years. Isn't it? Then we can grant that. So BPR also we can grant. Agree? I think now you have an idea where we are going to end up. Correct? Right. So this entire thing, you will have to deduct another 240 as BPR. So for the shares, IST should be nil. Correct? Yeah, okay. Right. Apart from that, you discussed about the residence nil rate ban, right? Is it applicable here?
It's house.
But residence nil rate ban is applicable only if you transfer the house or the residence to whom? To direct descendants. Correct?
So
It is not a direct descendant, right?
I'm right.
Yep. So it's not a direct descendant. Therefore, residence nil rate ban will not come into the picture in this particular question. Are we good? So whole story is clear now? Any questions?
Maybe family.
Yes. Okay. Right. Now, if we check on the calculation, they got 240,000 and they gave BPR for that. So there it is going to be nil. Then we took the personal chattels and the house. So house is 370, chattel is 160. So altogether it's 530. That would be the chargeable estate value. She has an nil rate ban, 325,000, true. But she has done a lifetime transfer during that period, isn't it? Which was 210 to Perla. That will attract the two annual exemptions for the current year and the previous year at that time. So 6,000 can be, yes. So that will be deducted, annual exemption. So the taxable value or the gross chargeable amount would be 204,000. By that amount, the available nil rate band will come down. Correct? Then the available nil rate band will be only 121,000 pounds. As a result, the taxable estate will be 409. That into 40% would be 163,600. Yes. So this is the first part of this. Because they're asking for the residue, not for the IHT. This is the first part. Once we do the first part, we have to move on to the second part. That is calculating the residue. To calculate that, I took all the estate assets that she had. Shares, house, and chattel. All together it's 770,000. Out of that, she's paying 90,000 straight away to Perla. So I take that out. Then the IHT also needs to be reduced, isn't it? So I took out IHT as well. Then the remainder would be the value that Riza is going to get from this particular estate. And they asked for a note for the relief. We had only one relief, that is BPR. We are just saying 2 points. 100% BPR can be claimed because two criteria are met: unquoted and held for more than 2 years collectively by Fiera and her husband. Okay. Was it hard again?
It's for remembering.
Yes.
That also.
So it's all about how much of concepts are there in your head. If the concept is there, the questions are going to be very straightforward. For the same question, in tax you should have get only 5 marks. Maximum 5. Let's see. So tax it would have been maximum 5, isn't it?
It's like it comes in entirely executive.
Yeah, can be 2 marks here. But here you are getting 8 flat marks. So that means this is easier than tax. Just that we have to have the concept in our mind. Okay, good. Right. Shall we move on to one more question then? The next one, part B. State the options available to Riza to relieve her share of loss of Pero and Co. for the year ended 31st March 2024 on the assumption that she does not wish to carry any of the losses forward. So she don't want to carry forward the losses. If that is the case, what can she do? So let's read the scenario first as well. Okay, so Pero Co. They prepare the accounts for 31st March each year. Good. Has a tax adjusted trading loss for the year ended 31st March 2024. Okay. Riza's share of the loss is 32,000 pounds. This is a pure theory question. You can relate to the previous parts of the question as well and try to give an answer. 3 marks, that means you need to give at least 3 points. Give a try. Okay.
forward. Now the tax. Okay.
So we give this benefit only for CGT. That is basically CGT can happen at any point. No? IST don't know when will happen, what will happen, and whatever you deduct is also not a final tax until you die. Once you die, only it becomes a final tax. Yeah, okay. Right. So if I just summarize,
So only 3, right?
what's the third one? No, there can be 4. So let's summarize all revision. So let's summarize all the individual income tax releases. So we can set off against the, so okay, the basic one is you can carry forward, right? That's a default one. Correct. But this is the default one. You have that option. Second one, total income relief. So when it comes to total income relief, we are talking about current year as well as previous year. Then we had another one called, okay, after you go for this, you have, once you set off against the total income, you can go against the chargeable gains as well. Correct? Then we have the opening year relief. Correct?
Last.
No. First 4 years, you can go backward and set off against the total income. Finally, you have the terminal loss relief. That is, last year, you can go for 3 years backward. Correct? These are the reliefs you have. In this particular situation, they are not willing to go for this one. So this is out. No, first 4 years of your trading, you can set off against the previous 3 years prior to the trading.
Yeah, but in this case, somehow the terminal loss doesn't applicable.
I'm just explaining the full story and let's see what are the applicable ones now. These are the normal reliefs that are available for trading loss. For this situation, let's see what are the applicable ones now. Sorry. Total income, yes, current year also you can claim, prior year also you can claim. That is given, like you said, that we can do. If you have any capital gains, we don't have any information about that. If she has anything after income tax, sorry, after total income, she can go for that as well. That is fine. Like you said, terminal loss is not applicable because we are not stopping the business. What about the opening year?
Last 3 years,
Let's see. Do we have any information when these are joined?
just 1 year.
Was it mentioned somewhere? Where is it still?
At the beginning. Waiting.
Ah, okay, so 2023 only she has joined, right? It's a partnership that we are talking about. That's why she's getting a lot of shares.
So there's no.
Correct?
It's just a beginning. Came apart and of the business.
Then the opening year really she can claim, isn't it? 31st March. Yes. From
There's no profit.
opening years, we are not talking about previous year's trading profit, isn't it? We are talking about previous year's total income. So she has been an employee earlier. So maybe employment income against that you can set off.
Yes, but trading income can.
Trading income. Because you will not, you might have a trading income, you might not have a trading income. So that we don't know. But total income we know for sure she is having because she has been an employee earlier. So we are sure there would be a income. So the opening year last relief also you can take it, isn't it? This one also.
So and you want push. Let's assume she has a trading income and another nature of the company, another company she can she account for this first.
Total income will be the relief, not against the trading income. It will be against the trading total income.
But is there a case that if it is in the same nature?
But in this case, it cannot be the same nature, right?
It's the same.
I mean, opening a relief story, it cannot be the same nature, same trade. Because first year, you will not have profit anyway. That's what we are talking about. Agree? So in the first year relief, it cannot happen. But in a going concern situation, it can happen. Then you can go back and set off against last year's trading profit first. We're good.
So a statement. What will the income are again previous?
So opening one is the one that we just discussed. So that is your losses in first 4 years, you can carry back and set off against your total income of last 3 years. So you can go 3 years back and set off against your total income if it is the opening loss relief. So this is the opening, right? Because for her, she's joining the partnership during this tax year. So it is within the first 4 years of her partnership period. Correct? So that is also available for her. So altogether, 4 reliefs are given, isn't it? She can either go for this, she can either go for this, or both together. And then she can go for chargeable gains also. Plus, she can go for the opening year relief as well, alternatively. So she has 4 options. Up to her to decide which mixture that she is using, but all 4 options are available for her. Okay. So with this, we need a full recap on the individual trading loss release as well. Okay? Sure. Right. Then shall we move on to the next question? Okay, what's the next requirement? Explain which of the right. Explain which of the available options for relieving the loss as identified above one will result in the highest income tax savings for RISA and calculate the amount of this tax savings. Give a try.
So it's kind of like when you answer this question, we have to provide all
Give a try. I can reduce it. You can, I mean, you can actually.
I don't know, like, yeah, I can access any. Okay. Yeah, it's not cool. Yeah, yeah. Yeah, it's not an app. I can access to any TV as well. Any TVs, any sound. So this. So that is you. Everything has it. I would recommend Samsung cell phones have it. I guess 21 has it. I guess. No, it's Samsung doesn't have it. Chinese phones have it. Chinese and Indians. Sure. Chinese phone. Yeah, that camera is also the quality issue. Quality has like 64. Okay. And okay, like 18 RAM and this is kind of expensive. I had another phone, it's like this cost me like it's 40,000. Someone okay, like it was like can control anything or videos are there. Oh, and the camera is like selfie is like 280. That, 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 yeah, this is so cool. Look, I have one other side because of okay. Which one is it? First, like, for like 4 years and still it's working. How much is the battery? Six that's totally almost there. Yeah, 1.5 days. I skipped it or everything is functioning there, it is there. Remember? 8 GB. Maybe an has 256 GB hard. 8 is enough and you can extend it here. Now this is like 16 GB there. Are you extend? No, we can extend it to a hard disk space storage. You mean the external SD card? No, internal hard space. It has like 256 GB. With that can exceed the memory. Okay. So, enough. Just like computer. True. Obviously. income tax we have taken from January or April, right? April, March, April, March. Yeah. Yeah.
But you have only 5 marks, huh? You have only 5 marks.
That's why there are like 3 days to calculate.
But first chargeable gain one is not applicable, right? We don't have any chargeable gains.
In no chargeable gains, but what I focused was current year, previous year, and open relief. That's why I'm assessing in 3 scenarios.
To be honest, this is a straightforward one. It's a straightforward one.
It's a straightforward, but a lot of calculations. You really know.
Can we check that?
So what I did basically was,
Hmm.
I compared. I did it with the current year.
Hmm.
Current year, I did. So there's a higher rate, the basic rate will reduce.
Hmm.
So that's the benefit. When we take it in when we carry it back,
Hmm.
when we carry it back, the last year basic rate will reduce and the previous year tax will remain.
Hmm.
When we do it in opening year for holiday, the first year, the entire is not taxable.
Hmm.
The second one is high rate and third one is high rate.
Okay, let's see. So Risa's other income is also given. So according to that, her annual salary is 96,000. So basically 8,000 pounds per month. Throughout her employment, she also received a bonus of 34,000 each year. So if I take against the current year, she has been employed only up until September.
6 months.
Uh, 13 September, right? April, May, June, July, August, September. Yeah, 6 months. So 8,000 into 6 is how much? So if we take the current year, let's take the methods one by one. If I take the current year method, the income would be only 8,000 into 6. That is 48,000, correct? Then her loss is how much? Overall?
There's a property income also.
That is mentioned where?
Loss.
That is 2024, 2025, right? No, no. 23, 24 is the current year, right? That is the next year, isn't it? So loss is 32,000, correct? If I take out the loss from here, how much is the remainder? 60,000.
Yeah, and it's wait for that.
Hmm?
Personal allowance also.
Yeah, so we have the PA also. You are not losing PA as well. PA was anyway there and you are getting PA anyway. So your relief will be at which rate then? Yeah, this will be saved at 20%, right? So on the first method, then how much is your actual tax savings? Great. So 32% into 20% means how much? Under this method, the tax savings will be 6,400. I'll just put that into a box. Second method is previous year. If I go to previous year, she has a salary of 96,000. Correct? Then she has a bonus as well, right? Which was 34,000. The overall
Salary is 40,000, right?
no. Previous year, now we are talking about
40,000 previous year, right?
no. Isolated we are checking. If I set off current year, what will happen? If I set off the last previous year, what will happen? Total income
96,000, 8,000 into 12, right?
correct.
Well, means we are taking from April onwards, right? April to September, it is 6,000.
Last year, full year you have been employed now.
Yeah.
This year only we have the consent. Correct. So it will be 10, 130,000, right? So at this situation, you are not getting any kind of a personal allowance at all. And you are becoming what? Additional rate taxpayer. Now, if you set up loss here, 32,000 pounds, what will happen now? Tax will be saved at 45%, isn't it?
When we reduce it, 90,000,
Because now when you reduce this one,
higher rate, 40%, that means
not just that, if you reduce this will be 88,000, right? Or 98,000? 88,000.
sorry,
98, right?
98,000.
That means now you can deduct your personal allowance also fully, which was not available previously. Correct? So here also you are getting a benefit. Then which one is more benefited for you?
Please.
Previous is more benefited, right? That's all we need to do.
So what about 2021, how we can, is that for 4,000, right? 4,000 we can make it to nil. We can make the entire income tax to nil, right?
We can make it nil, true, but tax savings is the amount of savings you are getting, isn't it? So even if you set off the entire 34,000, still it will be at the basic rate band, 20%. But here, we are reducing from the additional rate band, the higher rate. So your savings will be higher. So it's not about not paying anything. It's about what's the maximum benefit that I can get. So if I go for the previous year, I am get the tax savings at a rate of 45%. If I go to the current year, I will get only at a rate of 20%. So I get 25% extra plus the additional personal allowance exposure. Current year, anyway, I am getting the personal allowance. But if I use this against the previous year, I am getting another higher rate band rate for the personal allowance as well. Correct? So I have 3 benefits there, isn't it?
So the personal allowance and the additional rate.
Correct. So that is more benefited for me, isn't it? This is all we need to write. Let's see how they have drafted. Okay, current year and previous tax year they have given. So current year, like we discussed, it's only 20% that the benefit that you are getting. But if you go for the previous year, you are getting the exposure to the additional rate, 45%. And part of that will flow to 40%. That is the personal allowance part as well. So these two are the main factors for the answer. This was anyway an alternative answer. Opening year relief was an alternative answer anyway. So if you go for the opening year, the same calculation they have done, assuming you are setting off against the total income. Okay. So very straightforward one, not hard. Just that we need to get used to the, rather than doing the entire calculation, the impact analysis part we need to get used to. Because if I do the full calculation like you did, it will take half an hour to finish off this 5 marks question. But by impact analysis, to explain itself, it took less than 5 minutes. Forget about doing the answer, to explain itself, it took less than 5 minutes. Isn't it? So now as now we are professionals, no?
Yeah.
We are at professional level, so you should be professionals. So when we become professionals, we always go for the impact method rather than doing the full calculation, because we have juniors to do that. Our role is identify where it is getting impacted and quickly do some numbers and figure out what will be the end result. Correct? Now are we clear how to tackle this kind of a question? Right.
But if it is F6, they don't, will they prefer this one or that one?
F6, they will ask for calculations.
They'll ask the calculation, right?
Here they are asking for the advice, no? You just need to give the final answer along with the advice. That's something. In F6, yes, they might have asked for the calculation instead of the advice. But even if it is advice, they will be looking at the full calculation. For this one, F6, you would have get around 10 to 15 marks easily. Now, we good. Because they are asking for the full detailed calculation where they are giving marks for the workings as well. Here, it's all about the advice that you are giving. Okay? Right. I think there was one more requirement, no? Explain how income tax relief will be given to the interest payable on the loan taken out by Riza on 6th April 2024 and calculate the total amount of any income tax savings for 2024-2025 in respect of the relief. 4 marks. Can you give a try?
Yeah. I think that, income they won't impact, right? Additional income, because it's a trading loss,
Mhm.
so totally related to pay
Mhm.
interest payable on 2000, 4,000. So deductible and payable.
Wait, I didn't read the loan part yet. So she has taken out bank loans, first one 50,000 to provide additional capital. Okay. A loan of 80,000 residential investment property.
It's a property income.
I would say both will impact. Because first one, can you recall we had 4 qualifying interest categories? Yeah. So from the total income, we deducted something called reliefs. So that reliefs included something called qualifying interest. Like if you are a full-time employee of an employee controlled company and you borrow any amount to purchase shares of that company, the interest was a qualifying interest. If you are an employee and borrow to purchase equipment to be used for your office purpose, that was considered as a qualifying interest.
But in this case, they are not.
There were 2 others. Third one was if you are a partner of a partnership and you borrow to invest in the partnership, that interest is also a qualifying interest. So this is something similar to that, isn't it? You have borrowed to invest in the partnership. Property one, you can set off against your property income itself. Yes.
So only the first one.
Second one is a property income one. No?
Wait, first one is qualifying.
Yeah, first one is a qualifying interest. Second one, you can set off against your property income. So first one, you can set off against your total income. Correct. So that is what you have to write. So first one will impact your total income. Second one will impact your what you call property income. So overall, by how much will your income tax will reduce? That is the savings that they're asking for. So for that, we will have to figure out the full numbers. So her income wise, she'll be having 24,000 property income, right? Do we have any information about income that she will get from the partnership for the next year? That's a current year, no? We don't have, right? So basically, I would say 5,020 plus 4,000. Yes, that is also having an impact on the reduction, no? She's a higher rate taxpayer. So those two into the higher rate will be the benefit, isn't it? 40%. Agree? So that's all we need to do to get how many marks is that? 4 marks, right? Yeah.
That is.
Most of them were straightforward, except for the one before last one. That was a bit tricky. But the rest were pretty straightforward.
How do we mark profession? See,
Professional marks is mainly about how you present the answer.
how we present, right? If I go through the wrong card for the third one, I may lose the profession.
Some of the professional marks, I would say, not the entire thing, because it will not be allocated to one particular area only. It will be about the whole question. So you might still get some professional marks, but whatever they are planning to allocate around this area, you might lose. The main concern in the long way is not about the professional marks, it will be about time. You'll be losing a heavy amount of time. Main concern would be around time, because professional marks will be stated among the whole question. So if your format is proper, if your explanation is good, still you might get the professional marks. So long cut, the problem is mainly around timing. So these are the basic stuff that we need to be very careful when we are looking at these exam papers. Are you clear on how to tackle a paper now? That is the main thing.
So basically, how to understand the paper.
Mhm.
Formatting is the issue. Formatting can be a big issue in taxation, right?
Formatting, don't worry too much. You just need to do is, like I said, if it is a memo, just write in a memo format. Memo format in the sense, just put these stuff at the top. Listen. I just
No, I mean not that form. I mean the way we present the answer.
when you are presenting, I would say any calculation, do straight away on the spreadsheet. Then you get the final numbers, no? Based on the final numbers, give the explanation in the Word document. And always, like when I was discussing, I had a flow, no? If this happens, it will impact here. As a result, it will drive to this situation. Likewise, give that flow. Here to here, there to the final tax liability. If that is there, along with whatever memo, whatever the format that they are asking, with proper question numbering, then you are talking about marks.
It can copy and paste.
I don't think so.
It's not coming.
I don't think so.
It's not coming like
I don't think so.
that. It's like it's kind of like the same thing like stretch pattern, like
Yep.
kind of like stretch pattern.
Only thing, You just get the final number from the Excel and properly explain how you derived on the final number. Excel is about deriving. It's like a working. How you derived
We can't learn your Rex boxing, right?
in Excel.
Next,
No, no.
they work with this.
Don't worry about the presentation in the Excel. Excel is just working unless you are giving it as an annexure. If it is a memo or a report, yes, you can give the Excel as an annexure, then you have to have a picture perfect Excel.
So where they are waiting, they will go to the spreadsheet as well. So if we miss the reference, like you put it refer here, we have to sure say like refer spreadsheet is part.
90% of the time they will check the Excel. But again, if you are not giving the reference, you might lose the marks from the other end of the presentation.
Can give the question reference. I don't know whether they sometimes whether they
Annexure reference. Better to give the annexure reference because of the professional skill marks. Those marks are also there. And we have to capture the marks from that area as well. Because each single mark is very important when it comes to the exam. So it's always advisable to have that part also in place. Okay, good. Right, so we'll stop at this point. Next question, do it at home. We will do the discussion in the class. Yep.
that we
Yeah, no, yeah, studying. Okay. So we can give a try like that. Okay.